time for Lykken on Lending.
Welcome, everybody. Good to have you with us.
Welcome to Lykken on Lending, a weekly mortgage market update providing up-to-the-minute information on interest rates, loan programs, and hot industry news, all related to the mortgage industry. Brought to you by Transformational Mortgage Solutions. To participate in today's program, our guest call-in line is 646-716-4972. Now here's your host of Lykken on Lending, David Lykken.
Let's begin.
Listeners, I'm excited to have Lee Gillispie back on the podcast. You say, I don't remember him being a podcast for you regulars. Well, it's been a while since we had him on. It was with he was with a previous employer, and we were talking back then about data scraping off of as a result of getting data off of forms. And he was an expert at it. He still is, but he's found something new and exciting, and we're excited to share that with you. Lee, thank you for joining me on the podcast. Good to have you here, friend.
Hey, thank you very much for letting me be on today. I enjoy the conference. It's always fun talking to you, Dave. So I'm looking forward to the dialogue.
Well, I'm all about innovation and finding things that we can share with our audience that's really meaningful. And what you have found with innovative refunds is something that really is timely, especially in a time where so many people are struggling with cash flow. And anywhere we can find where we can get, some government money of some sort, it's well received. So let's get into it, talk about it. Tell us a little bit. First of all, let's get started. Give us a little bit of background on yourself. What has brought you through where you were to where you're at today?
Hey, that sounds good, Dave. I appreciate it. Yeah, so I'll give you that. I'll give you a lifetime in 30 seconds. How's that?
Yeah, how's that?
So I've been in our industry for a little over 20 years. Started out with an entrepreneurial company way back when, and then joined Fiserv, which is a name everybody knows. And I worked on the lending technology side for about 16 plus years. Enjoyed my time with them during that time. That's where we met before.
That's where we met first.
We talked about OCR, artificial intelligence when it was really new, how to do data analytics and really use all of that technology to qualify documents, ensure the file was complete, meeting CFPB guidelines. So that dates you right there when the last time that we talked. It was way back then.
Way back.
And just really, finding ways out of the paper world into the digital world that we're largely into today. Left Fiserv late last year. After a little while, things get stale, Dave. Now, maybe not for you, but they do for me.
I know exactly what you mean. When you're working for someone else, it's like that. Never gets stale when you have your own business. That's for sure.
That is true. And so started to look for something new, really wanted to do something fintech, just kind of small company, grow fast. I had enough juice for one more big push. And I thought, hey, why not? Started looking around and found Innovation Refunds, and which is a odd name for a fintech company, but I'll tell you more about it as we get into it.
Good. Well, I'm excited getting into that. And, but it was one of your friends that went to work for them says, no, you have got to hear about this. What is it that captured? First of all, tell us about what they do, the product, and then what is it that captured your attention about it?
Yep, I'll do it. So I hadn't even heard of the employee retention tax credit before I had the conversation with the friend who got me in this business. What I found out was it was there's a government program that was part of the initial CARES Act. So this goes back to the start of COVID, March of 2020, when PPP came out. The employee retention tax credit came out at the same time. The PPP was much easier to get. Everybody chose to go down that path. And it was an either or situation at that time, either PPP or ERTC. And then things evolved over time, as they often do with government programs.
Oh, yeah.
So how it worked was about mid-year of 2020, they changed some of the parameters. So a business could take both programs, PPP and the ERC, Employee Retention Credit. That's what they called it at that time. And then the last adjustment was in December of 21, where they allowed nonprofits even to take advantage of it and extended and improved some of the payouts and extended some of the timelines. So that's kind of the evolution of it. What it is specifically is an employee tax credit. So if an employer, so this is a lender, a lending technology company, an ancillary company, a brokerage firm, an independent mortgage bank, anybody who is within our listening audience that has a business, if you had employees during COVID and despite revenue going up or going down, you may be eligible for up to $26,000 per employee, which is actually really.
Did you say
significant.
$26,000 per employee? Still, even though COVID is starting to get in more and more in our rearview mirror, it's still there.
It's a government program that looks back. It actually starts to phase out in July of 24. So folks need to get into it now, but it's exactly that. So if you had employees on payroll and you paid them all during that time, your regular taxes, you kept them on, you did the right thing, you are potentially eligible for up to 26 grand per employee. One last thing on this, just to give you a perspective. Our average, the average refund that our clients get is between $300,000 and $400,000 from the government. So that's big money.
That's
for somebody.
average. Yeah, that's huge. Yeah.
So it could be a lot more. We have some folks will get a lot more, some folks will get less. But here's my thought for this conversation is that the businesses in our industry really did well during the COVID time. We did, it was boom town, folks were moving, all of that stuff. It was really great. Now is the down cycle. And now we have a lot of new companies and a lot of new businesses who did great during that time, but now they're suffering. Right. Even though their revenues were up during the COVID time, they're still eligible. Dave, we've had well over 100 mortgage banks, fintechs, LOS technology companies work with us. They've all got a refund despite the revenues because of the COVID changes that they had to go through. And you remember that, I bet.
We do. Yes, we sure do. So talk about who is eligible for these types of programs. So we understand now that it's available to any mortgage lender, pretty much any company. It doesn't matter just mortgage lending or outside of mortgage lending. It's available to the world. It's not just something unique to the mortgage industry or anyone associated with it. So it's beyond that. Our audience is that. So that's why you're making the comments you did. But I'm more interested in now getting into who's qualified and what employees. I mean, it has to be FTE, full-time employees that you have working there. I'm assuming they still have to be employed there. We've had a big reduction in workforce lately, so you can't claim this tax credit on employees that you let go of, I would assume. Is that correct?
No, well, actually what it does is it looks back to the employees you had during 2020 and during 2021. Yes. So if you had employees on payroll, then that's what they're looking at. And that's what they do. We do the math for you to be able to say, okay, This is what you're eligible to get. So now is
make sure I'm hearing that correctly. So even though you've done a substantial reduction in force, you could still get this tax credit on employees that are no longer employed there because you've done the reduction in force.
That's exactly right. Because you paid it's about what you paid and what you're now eligible for to return. During the 20 and 21. Now, during those years, we were adding people, right? I mean, revenues were up, employees were up. We've added more than ever to be able to deal with the COVID impact. And that's the narrative that goes with the documents that we process is, how were you impacted? Well, I had to hire more people. I had to go remote. I had to do all these crazy things just to keep the business moving. And that's what makes you eligible to receive the ERC.
Wow. It's pretty astounding, which is going to bring about some healthy level of skepticism about this. What does this have to do with amending tax returns and things like that? Where do we go with the implementation or the securing of this? How does someone go about getting it?
Yeah, it's a great question. So here's what we do first. We just ask the business owner to take a 10-minute survey. It's click on our website. You go through that. You kind of put in some information. We quickly tell you, hey, do we think you qualify? And then what would your potential payout be? Right? If you're interested past that, then that's all free. If you're interested past that, we're going to ask you to upload a bunch of payroll documentation from that time, as well as, depending on your situation, there's a dynamic form that says, hey, I'll need these other things in addition to that information. What we do is we digitize that and all of that information as quickly as possible. And then we have some intelligent workflows, as you can imagine. And then all of that is analyzed with our proprietary software and then presented to CPAs and tax attorneys who are familiar with this arcane tax law. And it is a bit complicated, it's true. Once that's done, what we do is get it ready to be sent back to the IRS for an amended return with the application for the ERC. The client at that point has the choice. I can go forward with it or I can choose not to do it. Again, at this point, nobody's paid for anything.
That's what I was going to say. No fees are paid. Your only investment is time of inputting the information into your website.
That's exactly right. Yeah. So you get, at that point, you choose to submit. It's the government. At that point, it may take some, right now, Dave, just to speak honestly, it's taken 6 months plus to get the money back. But
okay. But when do you find out if you're approved for the program? I mean, is that what you're talking about? The whole approval process, then the funding of that happens pretty quickly, or address
it's kind of become, we monitor it for you all the way through the process with the IRS. So we're always picking up, hey, we're looking for these. It's been about time. Have you had a chance to review it? Once that occurs, they're going to say, hey, listen, we've reviewed it, we've approved it. And then at that point, we start the clock looking for the checks. Now you're going to get multiple checks. It'd be like for every quarter you're eligible for these people, they'll get checks for each of those subsequent quarters. So it's not one check, it's a series of 4 or 5, maybe 6 checks. Could be even more than that.
So one of the questions I have as it comes to mind is, where do you guys make money in this process? You created a website. Are you getting a strip off of what the government sends them, or what is your revenue model?
Yeah, so that's a great question. Yeah, so we don't get paid until the client gets paid. We get 25% of what they get paid.
So if I have this right, it's a program that can even be applicable to employees you've cut because of reduction in workforce, because the volumes are down. Someone covers past employees, certainly covers existing employees. There's no fees up front to start to look at this. No fees at all to anybody. You guys aren't charging them any fees until such time as they've been approved by the federal government and they start receiving money.
Right. That's exactly right. That's how it works. Again, we take responsibility for the work that we do. We have independent tax attorneys who review each of these submissions. They have their E&O insurance. So if there's a look back over time, we're fully ready to participate with you. But we've been really successful so far. We just passed $2 billion working with clients in terms of payouts, and that's in 1 year. 1 year. We're at the point now where we expect toward the middle of this year, when things are at peak, we expect to be processing work for 10,000 clients per month.
Wow, that's amazing. Who came up with this idea? I mean, it's a program that the federal government has, obviously. I mean, is it through the IRS, or what? Who's actually sponsoring the program in the federal government?
Yeah, so the IRS has the pool of money associated with these payouts and these refunds. So they're responsible to do the qualification and the work after the submission occurs. So that kind of brings up, you talked about skepticism, that kind of brings up for folks, I want to hear IRS, oh, this is trouble, I don't know. But what we have found is, for the most part, if you've done your work correctly for these past returns, you can feel comfortable that when we process it, we qualify all of this stuff as well. So when we're finished with it, you should be pretty comfortable that, hey, listen, this is a good return. It's not going to be audited. You know, who can really tell? And I'm qualified that. Who can tell what the government's going to do in the future? Right. But everybody's done the absolute best they can to be able to maximize the return for the client. And we've been really successful so far.
It's an amazing program. I'm thrilled that we get a chance to share this with our listeners. How can they learn more? What websites can they go to?
So what I'd like to do, what I think we talked about, is the fact that you're going to have a QR code on your site. I would suggest for any of your listeners just to click on that QR code. It's going to take them directly to the Innovation Refund site and into the actual qualification questions. So that quick survey. So all they have to do is fill out that survey, submit it. We're going to quickly look at it and then provide them back some feedback, direct feedback that says, hey, listen, if what you told us is true and the documentation supports it, this is what you should expect. And again, I just want to emphasize $300,000 or $400,000 as an average return. What a lifeline that could be for our friends in this industry.
Yeah, it's amazing. Lee, thanks so much for coming on again. Listeners, check out the QR code on our podcast. If you don't have that, then get a hold of us. We'll make sure we send you with the link and get you started. I appreciate you being here, Lee. Great information, great program. Quite a timely.
I appreciate the conversation. It's always fun to talk to you, and I look forward to seeing you soon.
I'm looking forward to it as well. Thank you, Lee.
You've been been listening to Lykken on Lending, a weekly mortgage market update with your host David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.